We are in St. Thomas, Ontario, and Mary is on the line. Hi, Mary.
I have a question for David on Citigroup. I bought it at a higher price. Is it a hold here? Do you own it? And would Ford be better to switch to Ford from Citi?
So, Mary, looking at it through our lens, we like financial services, although we do prefer insurance and asset managers. In the big money center banks, if I had to make a choice, we would choose right now to be in something that's more domestically focused than internationally focused. If you look at what's happening, there's a very clear divergence right now in what's going on in developed markets versus developing markets. Developed markets are behaving extremely well. Our work points to deteriorating behavior in emerging markets. And sadly, Citigroup has big exposure globally, which at times can be a real benefit to it. Right now is a bit of a drag. So when we see what's going on in South America and in Asia, you can assume that that's having an impact on Citi as a company. I would urge you probably to look at a Bank of America if you want to own a big money center bank. Behaving much better positioned, I think, from an asset standpoint for the kind of market that we're in. Now, relative to Ford, completely different kettle of fish. I would say that I like exposure to the auto industry. In general, auto is performing well. Again, though, Ford probably not the best name in the group. We own Tesla. I'm not encouraging you to go buy Tesla because I think it's a different fish. But I think if you're looking for a trade away from Citigroup, I would get you to take a look at Bank of America.
You own Tesla in a couple of ways, don't you?
Well, we do. I actually drive one.
Did you receive it? You've got it?
Yeah, no, I've had it for about 6 months. It's a wonderful car. But I think that the company has a lot of upside in it in a lot of the other ways that people aren't thinking about right now.
Next up is Terry, who's in West Vancouver. Hi, Terry.
I just looking at the pharmaceutical industry for some time. It's had a lot of pent-up money, and especially like a company like Pfizer, who you'd expect with all that money would have access to some research and a new breakthrough and some drug to see it's on an upside. It's had a bit of growth in the last 6 months, but I'm just wondering what you'd think of Pfizer.
Right. So I'm going to use this to just talk about, one way I think you can look at investments. We like to find sectors that have been out of favor for a long period of time for some obvious reasons. In this case, pharmaceutical, there was a patent cliff and a slowdown in growth and so on. Through the period between 2000 and 2012, multiple that people would pay for those earnings contracted. A lot of these companies restructured the way they look at the world. The big ethical drug companies more or less became distribution businesses, became much more efficient, much less specifically focused on breakthrough science, started making acquisitions that they could tuck in and sell more apples on their apple cart, which Pfizer has done. And we now find ourselves in a world where there's very little growth. Predictability comes to a premium. People are willing to pay for predictability. These companies generate very good cash. They're trading at reasonable earnings multiples. Pfizer pays out about 50% of its earnings, a little less than 50% of its earnings in dividends. So there's lots of room for dividend growth as we go forward. And we've got an aging population. So healthcare is the biggest industry in the U.S., although I would argue is broadly under-owned in most portfolios. So for a conservative investor, whether you're looking at Pfizer or we own Merck as an example, the group looks good. And I'd also encourage you to look at the biotech sector because those are the companies being acquired. And so that's a second driver in healthcare, and you can do that through ETF or by individual names.
Do you own the IBB?
We own IBB, which is a biotech ETF. We also own BBH, which is a biotech ETF. I will say we own Merck. We own PPH, which is pharmaceutical ETF. We have a lot of exposure in healthcare. It's probably our biggest sector weight, about 27% of our equity portfolio.
That's not getting frothy?
Again, revaluation takes place over a long period of time. I would argue it's unlikely that Obama's healthcare program winds up cutting spending on healthcare over time. It's going to be available to more people. And countries like China are going to want to expand their social safety net, which means they need healthcare, which means opportunity for some of these pharmaceutical companies.
A lot of calls and questions for you, as usual, David, that we want to get to as many as we can. So we've put a whole bunch together in the Market Call Minute. We had Sago call in from Bedford, Nova Scotia on Whitecap Resources.
Right, Whitecap, focused in the Cardium, great yield, slow decline assets. We own the stock, and it's one I'd continue to buy.
Dale in LaSalle on NXP Semi.
NXP Semi is in near field communications, chips that are used for near field in a credit card. One that I would like to buy. We really like the semiconductor group. Buy the stock.
Jim in Pickering called in about Tim Hortons, partly on their big expansion plans announced yesterday.
Right. Tim Hortons, very good, solid dividend growth over time. Not the most exciting company. Consumer staples more related. I think there's probably better sectors to be in, but probably good long-term hold.
And which of these ones you've talked about so far do you hold?
We own Whitecap. We do not own NXP, although we have some significant holdings in semiconductors.
Okay.
And we do not own Tim Hortons.
Now, Alan in Prince George on Alcoa, it's had a big run. Time to get in or time to get out?
Yeah, so in general, we believe that the commodity cycle rolled over 18 months ago. Even in a down market, you are going to have cyclical rallies. Alcoa has been the beneficiary of some of this improvement. It's been one of the strongest stocks. We have owned Alcoa, even though we are underweight the commodities group.
Jim in St. Mary's on the TD Bank record earnings today and a dividend raise.
Yeah, the Canadian banks raising dividends, decent earnings. Growth may be relatively tepid. We own some exposure to Canadian banks, but we prefer insurance and asset managers.
Yeoman's work as always, and there's more to come. We'll have top picks right after this with David Burrows. Stay tuned.